Hi everyone, I'm Paul and welcome to my market update for the 31st of August 2022. Fed Chair Jerome Powell made his Jackson Hole speech a few days ago and the market reaction was strong to say the least. But if you've been listening to my market updates, then his messaging wouldn't have come as any surprise. I'll briefly touch on his speech in a moment, but in today's review of the charts, I think it's worthwhile to zoom out and look at the markets with a higher time frame. In this case, the weekly, as I think this is more indicative of where we are and where we could go in the future. So please like and subscribe and let's jump into today's video. So Jerome Powell started his speech at Jackson Hole by saying, "My remarks will be shorter, my focus narrower, and my message more direct." Now my take of his speech is this was a clear message directly to the markets because he just doesn't think that they've been listening to him. Now you'll notice that I've called the video Buy Fed Pivot, Hello Hard Landing, and the reason for this is twofold. Is, in my opinion, there's two really clear messages that come out of his speech at Jackson Hole, and there's obviously a lot of detail in that speech and I'll probably go through that in a separate video. But the first is that I think he really wanted to dispel this market myth that there's going to be a Fed pivot early in 2023, and he says this very clearly in that there'll be a restrictive stance for some time. The historical record cautions strongly against premature loosening policy, and what he's clearly talking about here is the Fed pivot. Now this has happened in the past and markets have been very quick to point out that the Fed has got it wrong and they've quickly reversed policy. And so what he's saying here is that that's not going to be the case. They're aware that they've made that mistake in the past and they're not going to be making that mistake this time. And the second part is hello hard landing. Now there's been a lot of talk about whether there'll be a soft landing or a hard landing. I think that a hard landing is almost inevitable at this rate, just given how rapid and how savage some of these interest rate increases have been. And I think Jerome Powell hints at this in his speech, and he says that another unusually large increase could be appropriate. Keep in mind we've already had the 75 basis point rise in the last meeting, and that's sort of triple what would be normal in terms of a normal rate hike would be 25 basis points. I think he's already tipping his hand that there'll be another unusually large rate increase in September. I think a 50 basis point increase is baked in, and a 75 basis point increase is looking more likely all the time. And Jerome Powell notes in his speech that whilst there was a good CPI print, I think it was in July, that just one single figure isn't going to be enough to change their stance. They would need to see consistently good numbers. He mentions a number of times that they're going to be data driven. And so one of the really key things for me that came out of this speech is that Jerome Powell specifically talks about demand destruction, and he says that they're going to bring demand and supply into better balance, and then he goes on to speak about how this will lead to higher interest rates that will persist for a longer period of time, and that's obviously going to impact aggregate demand. And really what all of that is just a nice way of talking about demand destruction and a slowdown in economic activity. And so whilst we're only talking about Jerome Powell's speech very superficially in this video, just from these few comments, it's very clear that there won't be a pivot, and the focus of the Fed is going to be reducing inflation through demand destruction, which is going to lead to a decrease in economic activity, which inevitably is going to lead to a hard landing and tough times for a lot of people. So as I said earlier in the video, I've been talking about the Fed and inflation for my past few updates. So anyone who's watching those, nothing in Jerome Powell's speech should really come as a surprise. I think they've telegraphed this all the way through and the market just hasn't really been paying attention. So let's have a look at the charts now, and I think looking at that weekly view on a lot of these charts is really going to illuminate that this has just really been sitting there all along, and it should give us some clues into what we should expect is going to happen in markets for the rest of the year and into 2023. So we'll start by looking at the DXY, or the US dollar index. Now I really think that the dollar index is one of the best charts to look at to really get your finger on the pulse of what's happening. So you can ignore all of the macro news, all of what's happening at the Fed, and really just concentrate on the DXY, and it's going to give you a lot of clues as to what's going to be happening in the market. So you can see the DXY, the trend on the DXY has just been super strong. We've talked about this in other videos. If we just zoom in a bit, you can see that every pullback has been bought, and if we look at it on a monthly time frame, you can really see how strong this trend has been. We've broken out of this range that we sat in for a number of years, and you can see we're racing up towards all-time highs up here at 120. Where I think we'll sort of end up is around this purple line here, where you can see this swing low is here on the monthly. And if we zoom back in to the weekly chart now, what you can see is we've broken through these relative equal highs here. We're approaching this buy side liquidity up here, and you can see just in the past couple of months we've broken this buy side liquidity relative equal highs here. Now on the way up, we've painted these two bullish fair value gaps. Now it's quite possible that the market will come back into this zone before going again. And as I said, you can just see up here, this purple, that's that swing low from the monthly. That's where I think we'll sort of end up towards the end of this run before we consolidate. So there may be pullbacks in the Dixie between now and the end of the year and into 2023, but I think certainly this trend is very strong, and it's just unlikely, I think, in my opinion, that this is going to abate anytime soon. And whilst we might get pullbacks, just like they have in the past, I'd expect these to act as support and for them to get bought until we push higher up into this zone and consolidate. So that should really give us an indication of what's going to happen across other risk assets. If we're seeing the dollar rally, we know that that means there's a move to safety, and there's going to be liquidity coming out of those risk markets like stocks and crypto and going into safer assets. So we'll switch over to the S&P. We won't look at the NASDAQ in today's video because the charts are essentially the same. So if we look back, we can see this run from the lows in June of this year. You can see how strong this rally has been. And as we've said in previous videos, this has been a classic bear market rally. And you can see what's happened is we've taken out the buy side liquidity here. You can see the buy side liquidity relative equal highs here. We took that out. We traded up into this fair value gap here. So this is one of the fair value gaps we made on the way down. And the reason why you can pick this one is if you run your fib from the top of the move to the bottom of the move that broke market structure, you can see we get our 50% level here. And we always want to be going short in a premium market. So you'd want to be short above there. So you're looking for the fair value gap above that 50% level. That's where it is. You can see on the weekly, we've just touched up into that bearish fair value gap before selling off. And so where do we think the market could go from here? Well, there's two likely places that liquidity is going to move towards. We're obviously filling out this inefficiency on the way down, and we have this bullish order block just here. So that's a likely place that the liquidity will draw to. And then we have this sell side liquidity relative equal lows down here. The next stop after that is obviously the previous lows from down here in June. And if we break those, then obviously a lot more downside could be expected. So in the shorter term, we're going to trade down into this bullish order block just down here. And the reason why this is the order block is you can see this is the down close candle before the up move, which had the fair value gap in it. So it's likely that liquidity is going to draw towards that particular area. And if we break through that, the next target would be the sell side liquidity relative equal lows down here. So you can see that ties in quite nicely with what we talked about in the Dixie. We're expecting the Dixie to continue to rally. It obviously may pull back between now and the end of the year, but we'd expect any of those pullbacks to be bought. And that's pretty much what we're sort of expecting to see here on the S&P. We're expecting a downward trend, so continue in this fall downwards. There may be some small rallies, but the overall trend is still bearish. So we'll finish off today's video with Bitcoin. Again, we won't look at Ethereum, just like we didn't look at the NASDAQ, because essentially what happens to Bitcoin is what's going to happen to Ethereum as well, and the charts are fairly similar. So we can see that the trend on Bitcoin has been very strong to the downside. We've had these small rallies on the way down, just like this one, but we'd expect the trend is going to continue to be to the downside until we see a period of consolidation, and we just really haven't seen that yet. Now you can see the all-time high from the previous cycle, which is here in purple. You can see once we traded down to that level, we've just sort of bounced and gravitated around that. And I think that's going to continue to be a key level for Bitcoin in the short term. If we lose that level, I think it's likely we continue to see lower prices. Now you can see as the market's traded down, we've created this bearish fair value gap here. And you can see as the market sort of traded up from those June lows, we've traded back up fairly deep into that fair value gap. And you can see if we use this as our break in market structure here, you can see we've pretty much filled in all of that inefficiency now, and as soon as we did that, the market has now started to trade back down towards this all-time high level, and we've just sort of bounced off that again. And so once again, the question we ask ourselves is, where is liquidity going to draw to? So you would still think we have a bearish bias. We have these relative equal lows just down here, and you would expect that the market will draw towards that point first. If we lose those levels, then the sell side liquidity relative equal lows we have down here would be our next target. And similar to like what we saw on the S&P, that if we lose that level, well, it's certainly going to lead to lower prices. And so again, you can see the confluence that we have here. We have a clear bullish trend on the Dixie, and we have a clear bearish trend on the S&P, and we have a bearish trend on Bitcoin. So you can see our risk assets are in a bearish trend, and the Dixie, which is our sort of mark of safety, is rallying. And so until we see some consolidation on these high time frames in both of these markets, I don't think that these trends are going to arrest, and I think they're going to continue at least until the end of this year and potentially into the beginning of next year or 2023. I hope you enjoyed today's market update. It's been a slightly different format. I tried to do it a little bit quicker than the previous ones, so I hope you liked that. Let me know in the comments if you did, and you know, it's a bit of a moving feast and evolving project, so I'm keen to hear your feedback. If you enjoyed this video, it'd be great if you could like it and share it, as that helps other people to find it. And if you'd like to see more content like this, make sure you subscribe to my channel and turn on notifications so that you never miss an update. Thanks for watching, and I hope to see you next time.